Good day and welcome to another WizzWatch. This is your host Marlin Rolle. Today is Wednesday, October 22nd, 2008, and I would like to talk to you about the major market indices, the Dow Jones Industrial Average, the Nasdaq, the S&P 500, the oil index, as well as the volatility index, also known as the VIX. Please have a look at this chart. This is a chart of the Dow Jones Industrial Average. I predicted that the Dow Jones Industrial Average will pull back to about 7,400 a few weeks back. Before heading higher, being that it is my downside support area on the Dow Jones Industrial Average. As for now, the Dow has been moving in a sideways consolidation between 8,400 and about 9,500 for the past 10 trading sessions at the lows of April of 2003. If you have a look at this volume area, right in this area right here, you will notice that the Dow basically needs higher than average volume in order to move to the upside. Also, if you have a look at the MAC divergence, it has been faking out investors by attempting to turn positive right here in this area, but it remains negative. At the end of the trading day today, the Dow ended down 514 points or 5.69%, with its last price at 8,519 on 1.2 billion trading volume. Today was the seventh largest losing session for the Dow historically. Please have a look at this chart of the Nasdaq Composite Index, and you can see that there are many similarities to the chart of the Dow Jones Industrial Average. The index has been whipsawing back and forth as many investors have been worried, trying to figure out where will all this downside pressure come to an end. If you have a close look at this chart, you will notice that the Nasdaq has been trading back and forth between 1600 and 1900, right in this area right here. Volume has also been below the average daily, and the MAC divergence did make an attempt to turn positive, but as for now, it remains negative. The Nasdaq ended the day trading at 1,615, down 80 points or 4.77% on 2.5 billion volume. Over at the S&P 500, there wasn't anything that separated it from the move that was made by the Dow Jones Industrial Average or the Nasdaq. The S&P 500, just like the Dow Jones Industrial Average and the Nasdaq, has been moving in a sideways consolidation below its average daily trading volume, trading between 900 to 1,100 points, whipsawing back and forth for the past 2 weeks, right in this area right here. And the S&P 500 at the end of the day closed at 896.78, down 58 points or 6.1% on 5.1 million trading volume at April 2003 lows. And please have a look at the MAC divergence. As for now, we need to see a cross on the MAC divergence to the upside in order for the S&P to turn positive. But for now, until that happens, we will remain in a bear market. Please have a real good look at this chart. This chart is a chart of the oil index. For the past year or more, many investors and consumers alike have been wondering when will the price of oil go down. After running up, making higher highs and higher lows for several months, oil hit an all-time high on June 14th at $147 per barrel. When George W. Bush took office 8 years ago, oil was trading between $21 to $23 per barrel, and many people worldwide have been feeling the pain in their pockets ever since. As of today, many of those questions have been answered. I predicted that oil will pull back to a low of $55 per barrel before heading any higher. This Friday, OPEC will have an emergency meeting, and there might be cuts in production and prices may start to rise again, but for now, oil will continue to slide. Oil ended the day trading on the downside at $66.75 per barrel, down $5.43 or 7.52% on the day. Last but not least, this is a chart of the volatility index, also known as the VIX. I call it a fair index, being that it's used to gauge investor confidence in the stock market. As you can see, the VIX has been on a run to the upside. All this means is the higher the VIX goes, the more fair there is in the hearts of investors in the market due to heavy selling. A few months ago, I mentioned in the newsletter as well as one of my videos that investors should go to cash because we are in a bear market, and we are still in a bear market today. If you are a smart investor, that would be the best thing to do. This is a stock picker's market, and a non-professional, this is your worst nightmare. So I will conclude by saying, if you are not a stock picker or have no clue of how to trade, stay in cash, study the market, and wait for the bulls to return. You can also take advantage of reading my weekly newsletter at WizzWatch.blogspot.com. And during the trading hours, you can find me at tradersplayground.com in our 24 hours option and stock trading chat room hosted by the market maker assassin, also known as MM. Thank you again for listening. Have a great day and happy trading.
This has been another WizzWatch presentation. These stocks are not buy recommendations. Please do your own due diligence or get help from a professional before trading.